Moving right ahead, Standard Bank's full-year earnings per share jumped 21% to 875 cents. The bank's net interest income grew by 7%, while credit impairment charges were 13% lower at 6.4 billion rand. The group's non-interest revenue was up 3% to 29.7 billion rand. Standard Bank is anticipating subdued revenue growth in 2012, but does intend to focus on cost controls. And let's focus on that line. Experiencing or expecting subdued growth over 2012 and focusing on cost containment, one would have said they've really been controlling costs for a long time.
They've done better than most of the other banks there, Bronwyn. What you are seeing is volumes coming through loud and fast. I think lending was up about 75 odd billion. The business banking retail side was up, headline earnings about 35 odd percent. They were growing transactional income. They're very, very fast. They're into the lower end of the market, unsecured lending. In townships, they operate from things like spaza shops, which is quite a change from the old stodgy Standard Bank methodology, which we used to know, lending from branches. The whole banking scenario is changing thick and fast, and I think they're at the tail end. They're not as aggressive as the First Rands, obviously not in the same category as Able or Capitec. They've got a lot of catching up to do, but I think they're their whole curve, they're changing. They're really starting to gather momentum on the upside of the curve.
Paul, Ron uses interesting words there. It's time for Standard Bank to play catch-up in certain arenas. And you would never have thought that those two words actually went with Standard Bank, because they've always been the leaders into, for instance, the African continent or onto the African continent.
Yeah, you're right. They were South Africa's preeminent banking group, and they were leading the charge globally. You'll remember those slides during the crisis when market caps of big global groups are being decimated, and Standard Bank briefly, I think, was in the top 20 or maybe even the top 10 by global scale. It's now a time where they appear to be retreating from that vision, and we know the relationship with ICBC, the Chinese bank, which owns 20%. So it appears as though they're kind of retreating from the global vision. We know they've sold the Russian business, they've sold the Argentinian operation. They look as though they're kind of winding in the London thing, which is quite a revelation, because that for a while was a very serious attempt. They indicate they're going to use less balance sheet and just be a distributor in that environment. So I'm very worried about where this is going for minority shareholders. Having said that, they clearly are in the business of making money from money, which remains a fantastic business. What can you say? Banking.
I'm also concerned about their strategy on the African continent. But by all accounts, they have pulled back substantially on that front as well. And that is what has always had them commanding a premium, is their African exposure.
I think they've paid their school fees, Bronwyn. They've paid quite dearly in their school fees. The growth nodes to me are certainly East Africa and particularly West Africa, Ghana and in particular Nigeria. These guys have put down a footprint and an infrastructure which is going to take most of the other South African banks a long time to achieve. They're probably about 3 years plus in front of the curve there vis-a-vis their peers.
Can I throw in there, if you look at something like ABSA and Barclays has got a presence in 10 African countries and ABSA in 4 African countries beyond South Africa. That makes 14. I think Standard Bank's only got exposure in 14 African countries. Isn't that correct?
Fair comment. ABSA do have a big daddy Barclays behind them. But I was talking more about the First Rands and the Nedbanks of this world looking to go into Africa. Those who don't have a big daddy and a big balance sheet behind them. Standard Bank are ploughing more and more back in terms of building critical mass in Africa. You can see the dividend was only up 10%, and I think that's the right philosophy. Some people were a little bit despondent that their dividend wasn't more in line with headline earnings per share. To me, ploughing money back when you can achieve the returns is the right way to go for a company like Standard Bank.
The other question is, of course, they're 20% owned by ICBC. Are we starting to see the benefits of that transaction, which is now some 4 years down the line?
Sort of. I mean, they worked together with ICBC on some of those transactions, like the sale of MetaX.
Sort of is very wishy-washy, Paul.
Well, ICBC, I think, has got global ambitions. The Chinese banks are enormous, and they've got access to an incredibly large depositor base. They've got offices around the world. So it becomes clear now that Standard Bank is supposed to be ICBC's bridgehead into Africa, and I suppose it's not even inconceivable at some point in the future that they could take a larger stake. I'm not that negative about the African businesses per se, because I know they've done the hard yards to actually establish bank branches, not branches, actual banks in all these countries with the correct regulatory requirements and capitalize them and so on. So the
So you
returns
agree
are
with
always
Ron that they've got the lead from an infrastructure perspective? Nobody can catch them?
Well, I think they are far advanced, and I think they've built it, and they've kind of gone the hard yards to find credible local partners, and so I'm not negative about that, but they clearly need to do a lot more business in each of those countries to justify the investment.
Ron, hot or not?
I think it's hot, yes. It was my stock pick in late November when I came on the show at 94 odd rand. We've now seen quite a nice growth. And I said at that particular stage, Bronwyn, that you'll only see the big growth in the numbers in the half year to June 2012. It's really starting to build up momentum. It's going to take size. It's a big ship. To turn a big ship around isn't done.
But it was a good call November at 94 Rand. Very, very hot at that point. Paul, hot or not, we had 108 Rand 39 on Standard Bank at the close of trade today.
No, I'm afraid I'm negative about all the big bulge bracket banks. In other words, the guys that do everything from retail through to investment banking, which I'll explain in a minute when we start talking about First Rand, which is the other player in that space. For me, this is a group of companies which have recovered from the worst problems of 08-09, but their capital rules and all that stuff is going to prevent them from being big winners.